Thank you. We're very excited to be here today talking about Latin America during the Singapore Fintech Festival among amazing panelists and friends. So the idea today is to show you a little bit of the opportunities that Latin America can bring to the global fintech world. Minister Ong yesterday said that a smart nation needs fintech in its heart, and I think that it's even more it applies even more to Latin America and how we can evolve even more because of a fintech. So to start, I want to start with Diego Molano. Diego, it would be great if you can share a little bit more of the numbers of the region and about the talent that we have as Latin America.
Thank you so much. First of all, thank you so much for the invite. I'm so happy to be in Singapore today and to strengthen the links between Singapore and Latin America. And I think please raise your hands, the ones who have been to Latin America. Not many. So let me talk a little bit about Latin America. In total, we are 26 countries, including the Caribbean. 640 million people, a large population, but united by language. Most of the countries speak Spanish, and Brazil, with 240 million people, speak Portuguese, and some islands in the Caribbean speak either English or French. United also by religion. Most people are Catholic, and united also by the democracy. Most countries are democratic countries. In terms of technology, you can see the glass half empty or half full. Today, about almost 65% of Latin Americans are connected to the internet. There are some countries with penetrations above 80% like Argentina, but countries falling behind like Nicaragua or Bolivia. But in average, almost 65%. So I think we have already enough infrastructure, enough connectivity to really trigger the fintech world. But the challenge we have when we see the numbers in terms of technology is not about infrastructure. I mean, everybody has a mobile phone. The challenge is how they use it. When you see the ITU numbers, the International Telecommunication Union numbers, if you compare the leading countries in like Korea or the US or Northern Europe, in the usage of technology, the gap between those countries and Latin America grows. And if you see the way governments are using technology, although we have technology there, the gap keeps growing. And one of the highest gaps that we have today is companies doing their digital transformation. That gap is even bigger. So the opportunity is to help companies to do digital transformation. I'm happy to be talking about the fintech companies, but the highest gap we have is talent. We need to improve in 4 areas of talent. Women, and I think this morning was very, very clear in terms of the role of women. Secondly, of course, the number of engineers. In general terms, we are producing every year fewer engineers. So not only we have a big gap, but we need to produce more engineers. And we also need leaders, digital transformation leaders. We need to strengthen that part. But today, we are having a good pool of talent that, for example, we are seeing a new pool of entrepreneurs. You see ecosystems like in Guadalajara in Mexico, or Santiago in Chile, or Buenos Aires in Argentina, or Sao Paulo, that are creating companies that are. Now we have more than 700 fintech companies in Latin America. That shows that there is a lot of young people.
Yeah, no, and definitely there's a clear gap in talent, but as more success stories start to happen in the technology world, that potentially is going to inspire more and more people to get into the tech space. As you mentioned, there's now around 750 fintech companies in Latin America, but we still see a clear equity gap in the region in terms of venture capital investment. Actually, I left Citi recently to join a venture capital fund, and part of our investment thesis is to invest in equity gap markets, Latin America, of course, being one of them. We have invested in 2 fintech companies at this point. One is 100% Latin America, which is Recarga Pay, and the other one, which is Above and Beyond, who did the master class yesterday, whose focus is global, but also attends the Latin American market. So risk capital is definitely one of the key drivers of getting the region into this fintech and innovation ecosystem. Irene, IFC is one of the leading investors in the region as well. Can you tell us more about how you see risk capital, a little bit more about the sector and some of the success stories in terms of investment that you guys have done?
Thank you, and good afternoon, everyone. Great also to be here in Singapore. I think we're all here fans of making this connection between Asia and Latin America stronger, and I agree with a lot of the description that Diego has mentioned in terms of what is the potential and some of the characteristics of Latin America. And why IFC, the International Finance Corporation, has invested heavily in fintech in Latin America. We see, just to step back first of why we are in this space in the first place, fintech can address the needs of the most vulnerable parts of society. And of the 640 million people in Latin America, there are a lot of vulnerable parts of the society, and we want to be part of that change. So this is why we are investing in this space. Fintech globally, we've seen about $50 billion going into that into the sector, 23 billion just in 2015. Only less than 1% in Latin America. So Latin America is still quite underweight. There's been about 40 deals for $200 million done in Latin America. IFC has been in 10 of those. So we are taking risk in Latin America, but there is a lot of space to grow. The way we see the market, you have regions that are bank dominated, regions that are more tech dominated, like Asia was at the beginning. And then you have those that are very much emerging as collaborative models between the banks and the technology companies. And Latin America is in that space. We believe in that collaboration model. And all the bets that we're making in companies in Latin America are those that are contributing to the formation of that ecosystem where there is collaboration between banks and fintechs. In terms of the advantages of Latin America and why many of you, including those that have not been to Latin America, why you should go there. Diego mentioned size, language, advantage, so it's easy to replicate the model across. We've seen and we have invested in successful models in Europe and in Asia that have been successful in replicating it in Latin America. So once you open the door in one country in Latin America, it's very easy to replicate it across. And the macro and the election cycle, I think, is out for a good cycle. After a few years of a bit of turbulence, I think we are into potentially a very good cycle. So we'll keep investing in this space and look forward to sharing some of the examples of those bright stars that we've seen in the market.
No, perfect. And you touched about 2 very important points that I think we're going to touch later. One, we're going to park for 1 second the collaboration model, because it's something that I want to discuss even further, and especially with the experience of Kurt and Diego in some of these programs. But you also mentioned the importance of fintech on really driving change in the region. And Kurt, from your microfinance experience, maybe you can go a little bit deeper into that topic.
Well, Latin America is very active in terms of financial inclusion, definitely. Even though there's a very well-developed financial sector in general, we see a lot of opportunities with what's going on in technology today. There are countries like my own country, Bolivia, where microfinance is a big actor, but that hasn't been the case throughout the rest of Latin America. You see big opportunities in large countries, Brazil, Argentina, Colombia also, where there are actors participating in microfinance, definitely, but they have not been, in terms of size, compared to banks and the rest of the participants of the market, relevant organizations. So maybe with Fintech, there are possibilities of new models that might go into those markets. The underserved are still a large portion of the populations in general in those countries. And maybe it has to do with the traditional microfinance models not being able to reach those populations. So one of the barriers that you see in microfinance has to do with costs. And doing a microloan in general is basically the same as doing a large credit operation. So with technology, and that's part of what we're doing in my own organization, in Banco Sol. We're transforming the business, the model that we use to do it at a much less cost, to do it more efficiently, and to reach the large numbers of people that are still unbanked. So we see in technology probably one of the bigger opportunities to really go deeper into these markets.
Oh, perfect. And Diego, you as one of our leading founders of a fintech in Latin America, why don't you share with us how you see Latin America as a market to grow from a fintech perspective, you as a fintech, but also explain a little bit more about your company and what you guys do.
Well, I think I share most of the points that were discussed earlier. I think Latin America is one step behind in terms of banking or financial services for its population. 60% of the population is outside the banking system. And I would say half of the other 40% usually go to the bank to withdraw money and use cash. So I think in that sense, that's a big opportunity. That's why I think Latin America is a big market for fintech solutions, because I think the traditional model has not been able to reach, as Diego as Kurt said, has not been able to reach to the bottom part of the pyramid, to the bottom layer of the pyramid. So I think in that sense, Latin America has a big opportunity, and at the same time we have an excellent technology penetration in the population. You go to the slums in Argentina and people has already smartphones in their hands. So I see that process of the penetration of smartphone technologies plus the fintech potential as the perfect storm for creating financial inclusion in one of the regions where it's more needed. And that's the goal of my company. When RSK is the first smart contract platform secured by the Bitcoin network, is the second smart contracts platform in the world, open smart contract platform in the world after Ethereum. And we created this company with the goal of fostering financial inclusion. And I will connect with one thing that Kurt said. To enable financial inclusion, we need low cost. And blockchain technologies provide one thing that is unique. With blockchain technologies, you create an account and you have no maintenance cost. And with the different technologies we are creating in RSK, we will lower the transactional fee to under a cent, under 1 cent USD. So once you have the combination of those two things, a no maintenance cost system, and you have half a cent per transaction, you are in the phase of having a viable solution for financial inclusion in our region.
No, definitely. Blockchain is going to be one of the technologies that is going to help in the financial inclusion model. But Irene brought up a point that it's very important, and it's for our region to leapfrog, we definitely need a collaboration. And I saw some extremely interesting models coming out of Latin America and Africa, actually in partnership with multilaterals like FinConecta and with IAP and Above and Beyond. And I know, Kurt, you were one of the financial institutions that participated in it. Can you share a little bit more about the program and why a financial institution like yours is being part of those type of initiatives?
Okay, we had two options basically when we were facing this. The decision was, of course, to change the way we do things because we want to reach more people, we want to go deeper in the market, and also in Bolivia, particularly what's happened is that we have new regulation that has put interest rate ceilings at rates that we didn't have and that don't exist around the world. We're talking microloans at a maximum rate of 11%. So that's a big challenge. And we have to comply with that till the end of the year 2018. And 60% of our portfolio has to be at a maximum of 11%. So the model we have today is not sustainable with those rates that have been put there by law. So we could either go with our own research and development and innovation area or partner with companies that have been doing this in the last years, that know the different organizations, the different companies, the different products that are out there already. And of course, we took the decision and went to for the second option. Even though we have a very valuable innovation department, we don't think that we have the means, the people, the resources, nor the time to really develop it ourselves. So we're partnering with external suppliers like Above and Beyond through the FinConnect program, through the IDB. This is a partnership that is already showing some results, and they have been giving us different solutions to the problems that we have been facing in this transformation process. So for us, I think that partnering is probably one of the better ways to really change the way you do things.
Speaking to then one of the more established financial institutions in the region, but one that has taken those steps, we don't see that everywhere. And in most of the countries of Latin America, you have a highly concentrated banking sector that is moving in the right direction, but some of them are still thinking that things are not changing fast enough. But one thing that I think is helping wake up the traditional banking sector is the presence of foreign banks that are seen, for example, in Europe, how consumers have many more options and are using and have the option, for example, of selecting to disclose their information to fintechs that are then able to offer them services. Considering that the population, these 640 million people in Latin America, are half of them under 26 with a very high usage of cell phone, like Diego was saying earlier, that adoption is only going to increase. And so I think the earlier adopters among the banks that buy into this concept of collaboration, I think are going to be the winners in the long term. And I think there is a very important role for multilateral organizations, international organizations, to play a role in enabling that collaboration, just simply transferring knowledge, helping regulators talk to each other, so that we create the right conditions. And we have seen good and bad examples of that. And for example, we invested in a company, Afluenta, in a peer-to-peer lender in Argentina. And a couple of the countries it expanded to worked extremely well. And there was one country that basically crushed it with regulation from day one. And didn't go anywhere. So you can really see the difference that working in a collaborative way to create a level playing field and exchange those good practices in terms of regulation can make in expanding those success stories. We don't have large markets except Brazil, like Asia has here. So countries in Latin America definitely need to collaborate.
And it's an evolution, right? And what Kurt was saying is a financial institution like Banco Sol can take one route or the other, and using the collaborated model was something that you liked and are seeing the benefits of it. As I mentioned, I was in City until very recently, and one of the last projects that we led was City Tech for Integrity. And when we launched it as open and as collaborative as possible, which was something also new and an evolution even more for City. On this case, there was absolutely no even right of first refusal of the technologies that were being submitted into the program. They could work with whoever they wanted that was part of the ecosystem that we created. And actually, I would love to hear from Diego, who was one of the participants in the entire initiative, one of the award recipients in Argentina, and who you're working with, because it's not even City that it's one of the potential clients that you're working with, and how this, from a City perspective, was important because of the community and the ecosystem that was created, and not necessarily only to bring new business models for themselves.
Well, the purpose of, we are working with companies in the ecosystem, in the blockchain ecosystem, that are creating solutions for transparency in government processes. That's the project we presented. And I think that's another virtue of the blockchain technology. You can use it to have fully transparent processes. You can have a bidding process where all the documents involved in the process are tagged or are recorded in the blockchain. So in the future, you can see that the process was fully transparent, was done, the rules were clear for all the participants, and that was the focus of that project in particular. And we are talking with the local companies that are specializing in notarization on the blockchain, and also with the government of the city of Buenos Aires. The idea is to use this technology within their processes. So I think it was very good experience for us. And I want to add one more thing about what was being discussed before is, I think the core of what we are talking about collaboration is at the innovator's dilemma. When you talk about a startup, startups have full incentive to innovate, while institutions, corporate companies need to run their business and be a little bit more conservative. So if you can mix, but at the same time they have the reach to the end user, they have the muscle to implement projects on a big scale. So if you manage to put those two things together, the innovation drive that startups have and the muscle and capabilities that corporations have, then you have a win-win situation. And I think that's what we need to achieve, and a good regulatory framework. I agree with Irene, it's also key.
And I love that you mentioned the regulatory framework, because that's one thing that I wanted to ask Diego. We see in Latin America a lot of these fintech associations popping up, and everybody's talking about fintech laws. But Diego, how do you see the evolution of potential fintech laws in the region?
I think the whole regulatory and legal framework is improving very, very fast. Now there are countries like Mexico with a bill now in the Congress, the fintech law. Argentina passed a law to encourage entrepreneurship with a crowdfunding law to encourage crowdfunding. In Colombia, I personally led the first fintech law in 2014 in order to grow the digital payment systems. So little by little, it is improving. But this, regulating fintech is a balancing act. For regulators, it's very, very complicated because they have to protect the interests of consumers and they have to protect the money from money laundering. But at the same time, they have to increase innovation and encourage the system to create new products. What I found so far is that there are new developments in the law. There are elections in Mexico, Costa Rica, Colombia, Paraguay, Chile, and Brazil. So most of the country is in election mode. So when you talk to the candidates, and I do that quite often, it is very hard to explain to them what fintech is. Very hard. And that happened to me when I passed the law in Colombia in 2014. So we have to speak the political language. And we are lucky because the language they are talking is about the benefits of fintech. The first one, most of them are talking about reducing poverty. So how to reach the base of a pyramid, how to increase financial services to the poor, how to increase banking services. And the answer is fintech. And the second issue is corruption. Everybody's talking about corruption, as you said, you put your example at Citi. This is a great tool. It is very easy to track corruption, just track the money. If the money is digital, it is easier to be tracked. So I think we are in the right moment politically, and things are moving in that direction. So if you have a fintech in Southeast Asia, and you work especially in these two areas, transparency or financial inclusion, you have a huge potential in Latin America. This is the time to go to Latin America to invest in the region.
I couldn't agree more with Diego in terms of saying this is the time to invest. Because of what we mentioned earlier, right? It's only 1%, so definitely the sector is, in terms of investment, is underweight compared to other regions, and it's the size of its GDP. So there is still, but there are many players looking for capital, and if you are an investor, I think you have the opportunity to be extremely selective, which in the experience of IFC, of course, is the key to success. We've reviewed globally 1,200 fintech companies when selecting where to invest, and a lot of them in Latin America ended up with those 10 that we invested in. So lots of lessons that have come out of that, and it's a very young portfolio. 80% of those companies have emerged in the last couple of years, except Diego's, perhaps. And so it's early to tell, but this is the best time to get in because valuations are a little bit more attractive, and all the context that we talked about earlier in terms of the macro also getting better. So I couldn't agree more, Diego. This is a very good time to invest in Latin America.
Irene, from a let's say, Asian investor, if they wanted to actually come and invest in Latin America, what would be the best way for them to navigate the market?
So most of the successful replications from Asia and Europe to Latin America that we've seen have used Mexico, Argentina as entry points. Some have used Brazil, but mainly sort of
Colombia here.
Portuguese. Colombia, obviously, in terms of size, comes second to others, but it is relatively easy thanks to the law that Diego passed a few years ago. It is a friendly environment for fintechs, a predictable environment. I think the very good thing Colombia has done is provide that consistency in the environment. So size, 40 million people, may not be as attractive as Mexico or Brazil, but it is a very predictable environment.
Cool. I'm getting a lot of questions from the audience, so maybe we can address some of these. There's a lot of questions on what are the best areas where Latin America can have a strategic advantage in terms of exporting fintech to the rest of the world.
Well, I'm a little bit biased, no? but I think blockchain technologies is one. I mean, Argentina is one of the top 6 communities in the world, together with the Silicon Valley, New York, Toronto, London, and Tel Aviv. So I would say Buenos Aires, it's specifically, and we are creating technology that is on the leading edge of the blockchain space. Not only RSK, of course, but also other companies there. We have some of the top security experts in the space. So I think that's one area where Latin America is definitely exporting. The other place where I think good projects are being born is in the credit space. As you mentioned, Affluenta, and there are many other successful projects in all Latin America. So I think, of course, the areas of expertise where we have the biggest needs are where we can export good tech everywhere.
A couple of other examples, perhaps personal finance management, success stories like Iabolso in Brazil, and SME space. eFactor, many platforms, many actually coming out of Argentina, because Latin America is predominantly dominated by SMEs. A lot of them are informal, and the lines between informal and formal are now more blurred than ever, thanks to fintech. And Latin America is definitely coming out with very pioneer examples of that.
Good. What are some of the needs that, for example, a financial institution like Banco Sol has that a fintech could solve?
Well, I think that there's a lot that we have learned in reaching clients from the informal sector, SMEs and micro actually. There's that technology, of course, that we can compare with countries like India in the region and some other also here in Asia. But I think that there's need for the next step. We, of course, have done this for the last 30 years. But now, as I was mentioning in the beginning, I think that there's space to really go deeper with the use of technology. What we have learned in the last 30 years is probably the beginning. But now, in order